Hi, this is Joe Rabil with Rabil Stock Research. So in looking at the current position of the market, especially the S&P, I thought it was worthwhile to do a lesson on why I use MACD and ADX together. I'm going to show you some things, especially some things that I learned from Gerald Appel, who was the originator of the MACD, and why I use a supplemental tool, especially at times like this. So we'll go through that. We'll cover some other market indices, and then we'll go through the symbol requests that came through. Let's go ahead and get going. Okay, so I wanted to show the S&P chart, the SPY going back to 2020, because I want to show two distinct periods where using the MACD by itself, I think can be lend itself to some false signals, maybe signs in your mind that the momentum has turned down, when in reality, we're in a period where we have a strong trend in place and you get these kind of false reversals in the MACD. All right. And the same thing happened back in, the middle part of 2021. And it took quite a while for it to actually kick in. All right. So we want to just give an understanding of what is taking place here, because when we get a violent and strong cross of the zero line, all right, and we get real strength with very strong momentum conditions in place, we need to be very careful about looking for a quick reversal just because we cross over to the downside. The MACD crosses the signal line to the downside. One of the things Gerald Appel suggested, and not in a few other books, it wasn't necessarily a MACD book, but what I learned from what he suggests is when the momentum is really strong, we don't actually want to use it as a momentum indicator. Now we want to use it as a trend indicator. And we want to kind of zero in on the zero line, okay? And we want to avoid the quick reversals. We're looking at the trend of price at this point and not necessarily the momentum condition, the potential for reversal, the potential for divergence, all of that. We want to focus in more on the trending condition that's in place and wait for price to confirm. All right. And what I use is a clean break, a violent break. Normally when it's clean, it'll be a violent break of the 18-week. We haven't had that all year. All right. We've had a couple tests of the line. We had one time where we gapped down below, but by the end of the week, it closed above. Other than that, we've pretty much respected this 18-week line. We need this type of price bar showing a break. All right. Now, one of the things that I do is as we're seeing this type of strength, now I don't want to mislead you, because there are some great signals that take place with the MACD. I mean, this is a beautiful downside move based on one of my signals, a pinch play to the downside. All of these are in my course and my book. Also, we have a standard divergence, then we have a pocket pinch play, and then the first pinch play that crosses above the zero line. When we got a zero line reversal, then we get a reverse divergence. So we have had some trading plays in MACD by itself. And we've also had confirmation in ADX through this period up until this most recent high. But if you notice what's taking place, the ADX really isn't confirming. The other side, if we look back in 2020, 2021, we had pretty good momentum overall in MACD, even though it kept crossing down. We had very good momentum in the ADX until right about August, September. The ADX stopped confirming on the way up. All right, we're starting to see that take place right now. Now, it's possible we'll get enough strength that this will confirm to the upside, but at this point, I'm a little bit concerned that we're playing out something along these lines, and as we flip over into a new calendar year, there might be some more risk associated with it. But in looking at MACD, sometimes you can't just use it by yourself because there's so many little divergence signals and crossovers to the downside. It'll just mislead you into overtrading. It'll get you thinking that things are flipping down to the downside. And this is on a weekly chart, which tends to not give that many signals. If you do it on a daily, you're going to get whipped around like crazy. So we want to use supplemental tools, and I watch these two together. Remember, this is based on the close. So this MACD is using the close to calculate what's going on. And the ADX doesn't care about the close. It's looking at the range. All right. So the range, the high-low range. So we're using two different types of price action and getting different feedback from that. And in terms of staying with this, you want to make sure that price is confirming. So we don't have any price confirmation yet. And even though the ADX is not confirming here and we're kind of sloppy, we're in a sloppy uptrend in the MACD, we really, before anything takes place or you get too bearish, you got to see a clean break of this 18 week. So anyway, good way. I think it's a good time to just remind you of how we want to use these two together. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. So my comments are for educational purposes only. Please do your own due diligence before making any investments. All right, so let's just follow up on the SPY now that the market's opened. Let's just see what this is doing. Now, I mentioned, obviously, in the discussion here is the lack of confirmation in the ADX, but also the green DI is something we want to watch. If this green DI breaks out, that would be a pretty good sign. Hasn't done it yet, and we've made a pretty decent move to a new high that has followed through. So a little concerning there, but notice what's happened on the daily. So we had a little bit of like a warning flare to the downside, and then we get a pop to the upside. Now we had ADX confirmation on this move up here, but on this move, we're not really getting it. It just barely made it to 25. So the green DI popped up, and you notice how it's really quickly popping right back down. Had a little bit of distribution on this decline with the gap. Now, I think, based on the way I'm looking at this, that if we break the 18 on the daily chart, right, that could end up spilling over and giving us a full-blown test on the weekly chart. So we got to be aware of what's going on the daily. I think if we get a real break of this line, show a little strength with some volume to the downside after the zero line reversal in the MACD on the hourly chart, then it just increases the risk right now, just based on everything I've been talking about with the increased bullishness I use investors' intelligence sentiment numbers, and those have gotten a little too unsettling high. And then with the volatility issue, market's been showing more volatility lately, and we've got this lack of confirmation here, just a little bit of a concern from that standpoint. Now let's look at the QQQ, because to me this is even a little bit more troubling in that, we never got real confirmation on an RS basis that things were turning back to the upside. But look at the way this played out. We pulled back, we consolidated, and then we spend all this time consolidating, and then we break out in one bar, and then we re-enter the next bar, no confirmation, and look at how low the ADX is on this time frame. So this tells me that even if we were able to continue to climb, hit another new high or whatever, that might cause this to rally up closer to 25, but I don't see this getting up. I mean, I think it would be very difficult for this to continue higher with a lot of strength right now and get this to confirm. So I would think it would make more sense we go through a little bit of a consolidation or correction period here. Now, it might push off into the new year just simply because there isn't that much time between now and year's end. But I just think we're running into a period where the risk is increasing, and you got to be a lot more careful about new buying. Okay, so IWM is another reason why we got to be very careful here. We're sitting at this key level. Now on the Russell 2000, it's 2,300. Now the 225 level is key in the IWM. I think if we re-break that, then this looks like a little bit of a busted breakout, like a false breakout, and that this is going to take a lot more time dealing with some issues from this 2021 high. Maybe this just takes more time. So we're just going to have to see. It hasn't done it yet. We got a reversal yesterday after it sort of dipped down below. So we'll see. Keep an eye on that. I think that's really important to the general market. Now, I got a few questions about the ARK funds. So I'm just going to cover 2 or 3 that look really attractive right now. This the robotics one, the ARKQ, has a massive breakout for the first time. And look at how this got destroyed. So this is your classic stage 4. Here's your stage 3 top, stage 4 decline, stage 1 base, and here's stage 2 uptrend. All right. Now, I don't know how long this uptrend is going to last, but right now we are in a bullish uptrend after a low ADX period. ADX is crossing above. I mean, I think you got to respect what's taking place in this move. All right. Let's look at the fintech version of this. We've got a really good pullback to the 18-month that resulted in a nice breakout on the weekly after a zero line reversal. Now the ADX is starting to get going here. I think these are both of those first 2, I think, are ones I'd be watching on a pullback as a potential opportunity. And maybe the market pulls these down. You know, if the market decides it wants to correct, what I would be looking for are the nice breakout patterns. So here's ARK Innovation. This is kind of the one that's the most popular. I think if we get a little bit more of a check back here, this one's not anywhere near as overbought. I think this longer term picture looks pretty good. It's not what I would consider to be a confirmed. I'd like to see this close on a weekly basis with a little bit more strength above this level. This is kind of the stage 1 basing area. We get a little bit more strength out of this, and yes, it would be confirmed, but it's earlier in the pattern. So I think if we get a little bit more of a pause here, it definitely could be worth taking a hard look at. So attractive what's taking place in those. Not all of those ARK funds look good, but those 3 are the ones that look the most interesting to me. Now, Amazon. Now, what I was just talking about with respect to the QQQ, look at what's taking place here. So we get nice strength. Look at the confirmation on an ADX basis, right? Then we get our zero line reversal. We get a strong move. We get an undercut and rally setup, and then we go to a new high. Now, since the new high, Green DI has not taken out this red peak. All right, we always want to go back and look at the prior peaks. It could be a green peak if it's in an uptrend, and consolidating, or in this case where we go through a little bit of a deeper pullback, we want to get through this. We want the green to break out above the red to kind of signal that things are moving to the upside. Now, what's troubling is that prices hit a new high. We can compare this peak and then compare this peak to this peak, and we can actually go and look at this peak and see that I was already mentioning this back here, but now we're getting another layer of divergence in the ADX line, where it's staying below the 25 line. I think if we got a little bit more confirmation of a downturn here, then you'd sort of have to feel like this has made a top for now, probably going to go through a longer correction phase. So it's something we're going to have to watch pretty closely. I think the 200 level is pretty important. I think any kind of a real strong move down through 200 would likely be, I think that would cause a situation where this takes a lot longer to get going again, and potentially maybe wants to test the 18-month again. Okay, look at this Amgen decline. So look at the violence. See that big red bar to the downside? We're even seeing a big red bar on the weekly, and we are back to the big breakout area on the monthly chart. So that could limit the downside in this, but it's basically dropped anchor. I mean, look at the volume, look at the strength of the decline. Any kind of a rally in this, I think, would be more of an opportunity to exit rather than, be looking to be a buyer on weakness. I would be looking to be a seller on strength. That's how I would look at this. It's too strong of a move on heavy volume. I think this is going to take a while to turn things around. Okay, let's look at the CVNA. Lots of strength in this. All right, now we've got a pullback on the 18-month at the end of 2023. We turn the corner and we get things going to the upside. It really started to kick in here with the zero line reversal, and we got going. All right, so we've got the strength. And we're not testing the 18-month. And we're really right now not even testing the 18-week. We were for a while, but now we're going into an accelerated trend where we're probably only going to test the 18-day now, not the 18-week until this is over. Now, I'm looking at this and I'm saying 300 looks like a big bogey here, big reversal point back in 2021. We're getting extended. Maybe we climb and keep moving up into the end of the year, or maybe follow through a little bit into the next year. I think if we get up towards that 300 level, you need to be looking for signs of sellers to show up. The momentum is good enough right now on all these time frames to tell me this probably isn't going to fall apart right now. It could have some short-term risk in it if the market gets a sharp drop because it's so extended, but I don't think it's ready to give it up yet. But I wouldn't be looking to be a buyer. I would be looking to be a seller again on strength. I would be looking for this. Now, the best way to handle stocks like this is to kind of scale and trail, right? Scale out as we get big moves and scale out and just keep trailing a stop. The only thing I'll tell you is that I think this 300, just looking at from an analysis standpoint, I do think this 300 area is going to be a little bit bigger problem. Okay, so we've got this DDOG where on the monthly chart, we make a move up and we pull back and hold the 18-month line. All right, so we held it back here, but it was still declining. Now we're getting a pullback and this line is rising. The MACD is actually holding its signal line. All right, but we don't have any strength yet. Do you see how there's zero strength here, meaning ADX and DI are all below the 25 line. You see how green DI has not broken out. ADX is still low. All of these are low. We haven't seen green DI take out red yet. We don't have any of that. So what we need is a breakout pattern. And what I'm telling my subscribers right now is on a breakout pattern, we want to see a breakout and then a test because the volatility is high. All the stuff that I was stating earlier about the environment we're in, I wouldn't just buy a breakout right this second and expect it to follow through. I'd be looking for a breakout and then look for some form of test in a form of a higher low or something like that. Now, the other option is to buy partial position. So whatever you would normally do, buy half of that on the breakout. All right. And then look for the higher low to confirm. And when you do that, you can do the other half. All right. So that's another way to handle this so that you can get positions on if you want that look pretty good like this. I do think this is an attractive pattern, but I just don't think I would want to jump the gun and put on a full position just based on the environment we're in right now. Okay. Look at the CRM. So, I know what a lot of times I get these people looking at pullbacks on the daily chart. All right. But look at how extended this is on the weekly. So unless I'm looking to play this as a swing trade just on the hourly and get it back up into this prior peak up here and then get out, meaning I'd have to really play this tight, probably be watching this all day if I were going to play it. And I probably would not do that. And my reason is that there's a decent amount, a couple of distribution days. We had a big red bar and then a gap down bar. I think there's some resistance here, and notice how the MACD is crossing over. So when we have strength here, but we get a crossover, I typically am looking for a test before I'm interested. Because if the test doesn't hold, then we know we're going through a much deeper correction, maybe an ABC correction that takes a lot more time. So don't be in a big hurry to play this off the daily chart. I think this needs to settle down. I do think there's a lot of support around 300 on this. But I don't think I'd be in a big hurry to play this off this pullback right now. Okay, Twilio. Now, this is the type of dynamics we want to see. You see the strength of this move. Now, this is a volatile consolidation. I like it when the ADX is low and it stays. So for the most part, we stayed low. We had one move here, but we had green and red and it wasn't like all three of these lines were low. When we have all three lines below 25 for an extended period, then you know that this is a quiet basing pattern and this is a very volatile one. All right, you can see how volatile this pattern is. With that said, the dynamics of the breakout are very, very good. But because I know I have volatility, I'm definitely waiting for a pullback on this time frame. I'm looking for this to settle down a little bit closer to the 18-week. It doesn't need to come all the way down to the 18-week, but it needs to come down a little bit closer and fill in a little bit before I'd be interested. Don't chase this stock. It's too volatile. You will get stopped out if you chase a stock like this. The volatility is just too high. So we're looking for a pullback in this and probably looking for an opposing trend pattern on the daily chart, meaning we get an AB. So we get a move up like we've got. Look for an ABC decline. while the MACD works its way down closer to the 0 line and the ADX comes down a little bit. If the volume pattern stays like this is heavy, strong volume on the way up. And yeah, we've seen some selling volume, but not that bad. If it keeps that up, then this could really set up on a pullback closer to the breakout area. Thanks for watching. I won't be doing a show next week, so everybody have a happy Thanksgiving. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week. We'll see you next time.